Welcome to Charts Today. My name's David Linton, and today's edition for Thursday, the 18th of March, comes to you from London. And we start by looking at currencies, then we'll look at equities through to commodities, and last of all, we'll look at the latest coronavirus stats. Quite interesting looking at the charts there. So a really big dive on the dollar last night on the Federal Reserve comments. So that's interesting you're seeing that dollar index falling like that. Remembering this is my long-term, medium-term and short-term view of the market, weekly, daily and 60-minute with the corresponding point and figure targets, and these are my tracker charts. So we see here that the dollar is falling lower. On that short term, just bearish, just found a new floor, but the medium and long term trends are still those of a turnaround. And we're seeing the euro still below the 120 level, despite that jump yesterday on the comments last night in the Fed. We are still seeing the long term chart looking pretty bullish against the dollar, but the signs are that this trend is waning and dollar strength is likely to be more of a theme this year than it was last year. Against the yen, we're still holding the 109 level, so despite the fall in the dollar, the dollar is recovering there, so looking pretty strong. Sterling sitting at 139.50, so here we did see the jump on that dollar move. Against the euro, we're sitting at 116.90 this morning, so looking strong there as well. And if we take a look at Bitcoin, we're sitting at $58,000, back into short-term bullish territory, but at the moment, quite a flat week for Bitcoin, seesawing there. The S&P 500 index did close to a new all-time high, so we are seeing strength there. Equities looking strong off the back of those Federal Reserve comments, so looking pretty strong there. The Nasdaq less so, hasn't got anywhere near the high that it made in February, so we are seeing tech just really still struggling in relative terms. Looking at the futures this morning, we're seeing the S&P future down 0.4% and the Nasdaq down over 1%. So we're seeing still that tech is looking relatively weak, and there's still a lot of rotation going on in the market there. The VIX volatility is below the 20 level on those Federal Reserve comments. So that's the first time really that we've been below that level since March last year. So markets are less fearful. And looking at the FTSE future this morning, it's flat, still a long time away from making new all-time highs. But in Germany, the DAX is making new all-time highs. Auto prices driving things there, so auto manufacturers pushing the DAX to new all-time highs, and we are seeing strong upside targets there, so that's significant. The CAC Quarante is also up 0.25%, and Japan is up 1.3% overnight. Fairly strong showing in Asia. We're seeing the Hang Seng up 1.3%, and we also saw China, the Shanghai Composite up 0.5%. Not yet short-term bullish, but those long-term targets still very compelling. The Indian market was actually down, and the Aussie market was also lower overnight, so quite key there. Taking a look at gold, we're sitting at 1737 this morning, still holding on to the short-term bull trend, still have work to do on the long term. We have activated this upside target to 1860 now on gold, so that is good news for recovery. And it looks like we might be just finding some support there on the interim target. Silver is sitting at 2617, so that's looking good on all three time frames as well. And of course the big one was what happened to bond yields off the back of that Federal Reserve comment last night. We did see a jump in the bond yields, and we're now on the 10-year yield sitting at 172. That was unthinkable a year ago when we were sitting at lower than 0.5%. We are seeing bond yields pushing higher. 174 is the target. Looks like we're pretty close to that now, and we've got this long-term target of 327. So 187 is now the new target on the short-term chart. It looks like a one-way bet on bond yields at the moment, so that's quite key. On the 10-year, on the 30-year, we're sitting at 208. So again, we did see a little bit of a jump there last night. 248, 241, 247. Don't be surprised to see bond yields in that price area. That's what the targets are telling us. You can't ignore the targets. Looking at the energy mix now briefly, we see Brent Crude just struggling. We were neutral to clients on Brent Crude this week, felt we were very much in a range, and we are just wandering sideways. Will we see this target to 83? Will that be met? Possibly not this year. We might have to wait to come back another year, and we are seeing now downside targets 2 and 3% lower, 4% lower on the 1 minute chart. So it looks like crude oil will fall away. US nat gas hovering at the 250 mark, so that's quite key. We were bearish on nat gas this week. We have got downside targets there. Coal is sitting at 71.75 this morning on the OTC price. We have broken out here on coal, so that's really significant. Look to this target now, 72. We had these upside targets, so that's quite key as well. And emissions, no secret, we've been very bullish on emissions, pushing higher to the interim targets that we've been giving, so that's quite key too. Gas prices up a third of a percent on front month TTF, so we are just seeing a little bit of a recovery there. We've got some upside targets, but long term we are wondering. The seasonality, not a great time of year for gas. German power, again, we put out a very bullish report last week on German power, pushing to new highs here as well, reaching for those targets. Taking a look now at the COVID stats. So this is new cases. This is off the One Market data feed, as the Our World and data feed. This comes now into all Updata systems, so you can configure your system to get this data. Really useful. And here I've built a watch list of new cases, and so I can actually just click to see where the cases have risen the most overnight. 7% is where we've seen the strongest rise in cases. Remembering, of course, this rises in this instance are not good versus prices. And we're seeing here Germany, cases just starting to rise there. France on this steady rise here. Bulgaria looking very worrying. Poland also looking worrying. Netherlands, we're seeing a rise here. And we've got the numbers per million, so we can cross compare. So the UK, for example, is sitting at 84 cases per million versus the US at 65, so half the US rate. And if we look at Italy, on the rise here on cases, 374. So, and then of course, really high case numbers in the Czech Republic of over 1,000. So really worrying situation there. Similar in Hungary, neighbouring Hungary and Slovakia. So interesting to see how this develops. I've got this saved as a layout which we'll put in the library so users can download and monitor this themselves. And then if we look at deaths, it's a bit more morbid, but the reality is this shows what's going on. So Germany is at 2 deaths per million at the moment, falling. UK is at 178, so the death rate in the UK is now the lowest in Europe, looking here, and lower than the US, or again around half the US. So that's quite significant. Very high death rate still in Hungary at 16 per million, Slovakia 15, Czech Republic 20. So to think that the death rate here in the Czech Republic is some 15 times greater than in the UK at the moment. So that is worrying, and of course the shape of these curves is worrying that they're rising. So we still do have a big problem in Central Europe with the virus, and these charts really tell that story. That's it for today. Until tomorrow, happy charting. See you then.